Hey everybody, Chris Johnson with Money Morning. You've been asking for it. I've got it. ACHR Aviation update coming right now. And as a bonus, I'm going to throw in a view of Joby Aviation that pulled back 8.5% today after their earnings. Is it a buying opportunity? You know I've got the charts that are going to back up telling you where you buy the dip on both of these names. ACHR's reporting earnings next week too, so you'll want to pay attention. A little long here. We're going to go about 20 minutes. Well worth your time. You're going to learn something new and you'll be a better investor for it. Let's jump in. All right, as I always say, let's jump into it right now. You've been asking for an update on ACHR Aviation, and it has everything to do with this chart. And this is the updated one. We'll go through it in just a second. But first, I want to talk a little bit about what's been happening with the company. A couple weeks ago, I showed you a chart that looked exactly like that, except it showed support at $10. That was the buy the dip level that we talked about, and it's breached below that price. Let's start to talk about exactly why that's happened. And it comes down to something very simple, but there's also something very complex behind it. We've seen no headlines. Remember, this is a discovery stock. This is one of those stocks that's obviously an aggressive growth company. It's in discovery mode right now, early stage, you can call it whatever you want. You like to see headlines for it. And when we don't, we see huge pops in the stock the way that we did, and you see the traders start to come in and sell. Taking profits is not a big deal. Everybody does it, especially the short-term traders. But when we don't get those positive headlines, that's when you start to see a stock pull back the way ACHR has. Now, in addition to that, we've just seen a long stretch of no headlines for the stock until today. ACHR came out and they announced two acquisitions here. Overair's IP, or their intellectual property, and that was patents. And then they also hired some of their people, their key talent, if you will. That's going to help them to start expand what they're doing in terms of the military eVTOL. They also acquired a 60,000 square foot composite manufacturing facility. That's also going to get the production going as they start to grow. And it's all looking for that next generation autonomous eVTOL, especially in the military aircraft area. And that is all because of this right here, $13.4 billion that the Pentagon is looking to put into this area to grow our defenses. Now, if you recall, back in March, we saw Palantir come out and say they're partnering up with ACHR Aviation. Let's put it the other way around. ACHR wanted to partner with Palantir. That is where we're going with ACHR Aviation. I know we talk a lot about the taxis and the Olympics and all of that, but keep in mind, $13.4 billion with the military and the Department of Defense. That's where the big money is going to be with a company like ACHR Aviation and those partnerships that are going to be out there. So they announced those two strategic acquisitions, and that's going to have the stock, at least from a longer-term perspective, moving the way we want it. But let's look at what has happened with the options activity. And this is the chart that I showed you just a couple of weeks ago. And if you remember, we were talking about support beginning at $11. You had resistance at $13, and $10 was that level that I said, hey, this is where you start to think about backing the truck up and buying ACHR Aviation. If you look at it today, we breached that $10 level, and people are asking, is this it? Is it over? Well, this is 2 weeks ago, and I'm going to point out before I go to that next chart, look at the $10 and the $11 strike, and you've got about 6,000 contracts open at both of those, right? This is put open interest, and the reason it is important is because once you start to hit these levels of open interest, and $13 was the level we talked about as resistance, and it played out that way. But once you hit those large put open interest levels, that's where you start to see a lot of mechanical hedging activity going on. So in other words, the people that sold those puts are going to have to start hedging themselves. They can either start buying the stock, a number of different things, and it's too complex to go into. But I can tell you that historically, on heavily option traded companies, this is one of those things that works. You also talk about pinning the strike. That'll be a fun discussion later. But let's go back to this chart and keep in mind 6,000 contracts that you've got right there at the $10 and the $11 strike. This is 2 weeks ago. This is today. Look at that big red bar. Now, this is that put open interest, still the August expiration options, right? But it's now at $9.50, and it is extremely large. More than $900,000, just shy of $1 million, was traded on July 31st. So just last week. That is somebody coming into the market and saying, hey, this is the line where I draw it and say, I'm going to protect myself, whatever. The people that buy those shares, sure, they want the stock, or those put options want the stock to go lower. But the people that sell them are more important. As we get closer to expiration, that's where those people start to hedge those positions and why it starts to act as support. It can go the other way when you have a delta hedge that goes wrong and the stock just tanks on you. But right now you look at that $9.50 level and the $8 level, and that's exactly where we're bouncing right now, $9.50. And that's why you're seeing the support kick in. I also want to point this out. If I go back to that chart that we saw from 2 weeks ago, notice the moonshot position was there. It was entered earlier in July, and this was millions of dollars on that $20 strike. When we fast forward to today, it is still there. Why is that important? Well, look, we talk about very often, and it's in hindsight, when you see something where somebody says somebody knew something about this trade. I don't care if it's a politician. Nancy Pelosi is famous for these type of moves, right? She buys call options on NVIDIA right before some announcement, and it sends the stock through the roof. And she's got call options, so she benefits to an X degree of leverage, right? We see about it in hindsight. Well, guess what? This is in real time. We're actually seeing that indication before, as if somebody knows something could happen with Palantir. It doesn't suggest an insider, but just somebody that's got some knowledge, because you don't put millions of dollars into a trade that is going so far out of the money in terms of that put. This is 100% from where the stock is right now, and they expire in just a couple weeks. So those trades are still out there. That's why I say, man, this is one of those where if Archer comes out with some good news next week, August 11th is earnings, the stock is going to go through the roof. And then you're going to hear all kinds of people start to talk about, hey, did somebody know? I'm telling you now, there's a chance of that happening. Until then, I look at that support at $9.50, and that is where I find the stock attractive, not only on a short-term basis, but a long-term basis. Let's look at the chart and how this translate into the actual technicals. Notice I've got that large open interest, the put open interest at the $9.50 level. This is also where we're seeing the stock bounce over the last week, right? We breached that $10, and $10 is significant because it's psychologically important. A lot of people look at round numbers, and it is a phenomenon. It works, believe me. You'll see when a stock breaks above $10, they tend to shoot higher. Boom, boom. And notice how Archer has been holding that $10 on these pullbacks. The one thing that concerns me, that 50-day. If you watch me a lot, you know that I watch that 50-day moving average trend, and it's got a little bit of a hint of a bearish trend that's kicking in right now. It's at $10.60 or so right now. And when we watch that, when we see that, I want to see the stock break above that trend line, and that's where you're going to see the stock start to rally up towards that $13. Remember those 13 calls we talked about as resistance? That's why you saw the stock top out in July around that 13 level. It's that simple. It really isn't. You have to watch all of this, but it's that simple. So let's bottom line it here for you and say, what do you do? Well, look at the Archer Aviation September, and you see the 15 calls are where the resistance is going to lie, and that is looking out to September, and we still have a lot of put open interest that's right there at the $9 and $10. That's why I suggest that there is a floor at that $10, $9 level or so. I turn into a strong buyer at that point. I've mentioned it before. I leverage the move myself personally with leap options on Archer Aviation on Joby that we're going to hit in a second here. I leverage it. I choose to do it that way. I can actually pick my risk level in terms of what I want to put on the table. And that's how you get some of these returns that are usually leveraged for 7, 8, 9 times what the stock moves. It's a patience game. These are January 2027 options. I'm playing the trend here, folks. I am not trading something for a day or 2 days or 3 days. This is months and even obviously years we're talking. So short term, we broke through the 50-day moving average. I watch that very closely. It's turned slightly bearish. Concerns me, but not enough to get out of the position. Large put open interest helps to provide a hedge support at $9.50. Speculators still have that moonshot position on at $20. Why? I always put that. Why? And then you've got the earnings release coming up next week on the 11th. That is confirmed by the company. It's up on a press release on their website. That's when you're going to see the fireworks start to happen. Joby missed their number. We're hitting that in just a second. Break above 13 causes an aggressive rally to $15, but those $20 options are out there, and somebody does not make money on those unless they close above $20 by the third Friday in August. They can make some money because they bought them when the stock was much lower than that, but not the big payoff. September loosens up overhead resistance with a $20 target by year's end. I'm willing to actually up that and say 25, but we don't have that down on the website or anything yet. Let's transition to Joby. I just downloaded a bunch on you. Joby has been the winner, and a lot of you have pointed this out in the comments, and make sure you put some comments down below. And while I'm doing this, don't forget to sign up for the Magnificent 7. No, the Spectacular 7. That's the report that I put together that hits eVTOL companies, nuclear AI companies, everything that's out there that's going to make up the speculative 7, including quantum computing. There's a link down below. You can do that. But when we look at what is happening with ACHR, which has been the leader here, we have seen just a great story. Let me fast forward to that chart real quickly. What we saw last week, or actually it was last week, we saw the company come out and do another acquisition, just like ACHR, right? Blade came out and they bought up a company that it's Blade, but it was basically to get into some commercial routes out on the East Coast. They are looking for that commercial market big time right now. We saw a huge surge in the stock. Blade was up 20%, or Joby rather was up 23% on that day, which tells you that the market loves the idea. But notice that we've dropped right back down. A couple things have gone on. Let's look at that chart real quickly. They did the Blade Air Mobility acquisition last week. We shot through the $18 level. Options are going to come into play here, folks. Believe me. So Joby stock has soared 400% since coverage began, and we've seen this stock, it is up huge multiples for the year, right? So what happens when that happens is that you start to see Wall Street analysts get nervous about one word, and it's called valuation. Here's a hint for you. Please, when you're talking about early stage development, early growth companies that are in this discovery stage, try to throw the word valuation off of the table. And I know that goes against Warren Buffett and a few other people out there that say it. But if you're looking at valuation, PE ratios, and keep in mind, right now you've got a company that's losing money. So valuation's hard to put a pin on, right? But when you hear analysts start to talk about valuation, make sure you keep your eyes on the horizon, that you're looking out long term, because the valuation is unknown. It is whatever the market says it is right now. And for Wall Street to come in and say that it's overvalued, let me point at Palantir, folks. And everybody in my comments on the other Palantir videos say the stock is overvalued. Well, guess what? It's not. The market assigns a value. Let me say that one more time again and be serious like this. The market assigns a value. It's not the analyst's job to do it. It's the market's job. And Palantir has left the analysts all behind. And that's what happens when you try to assign a valuation using its revenue or its earnings in early stages on a stock that is developing and turning into one of these moonshots, just like Palantir. Same thing is going to be true with companies that are speculative like Joby and ACHR Aviation, and that's exactly what happened. We saw analysts downgrade the stock from buy to neutral, citing the stock's massive 400% rally. If it goes up 800%, are they going to be unhappy? Well, if it goes up another 50% from here, the analysts that downgraded it will be. But they're looking at the upcoming catalyst and thinking that they're already priced in. That is the testing, the FAA certifications, which Joby is closer than ACHR Aviation right now, and the commercial rollout in 2026 and 2027. They're also looking at the FAA certification stage very closely and how Joby has expanded that type or the actual access that they're going to have to the vehicles here. And that is obviously, when we look at what happened with Blade, what they're trying to do. So they're saying all of this has been factored into the price. But most importantly, what's happened today, and it is today, was that the company missed earnings. The company missed their earnings. 22 cents is what the expectations were that they missed by. They made a small $22,000 in revenue. Remember, this is pre-earnings, pre-everything company right now. It's still in development phases, but the market reacted by selling the stock off, and we saw Joby pull back 8.5% for the day, and it is all because of that little perfect storm of the analysts coming out and saying they're downgrading the stock and the earnings falling short. Well, guess what? Don't try to gauge it by the earnings. And again, that goes against common perceptions of what you should be doing on Wall Street. But we're not talking about a usual Wall Street stock. This is not Walmart. It is not NVIDIA to some degree. It is Joby Aviation, which is one of those companies, highly speculative, but you're getting paid off right now for being patient with it. So what does this chart show me? Well, it reflects what I see in the open interest configuration. Support at $17 and then some resistance at 18. And keep in mind, one of the things that is going to happen here because of this move, you're going to see Joby come out and they're going to do a placement of shares. They're going to come out and raise some capital in the market. And what that means is a little bit of dilution of the shares for the ownership that's out there right now, you and I. But it is also something that they need to do, and it makes sense because the share price is so high or has been so high. When they announce it, could be a private placement. We'll see how this thing goes, but it's going to have a price assigned to it that's going to be a bit of a discount, and the stock's going to drop to that price immediately because that is what market will take as a valuation for that moment in time. But keep in mind, that is temporary, and it is healthy for a company to do that is in this process, building themselves up. So expect to see that and some volatility that goes along with it. But what's more important to me is where that open interest configuration starts to point to support and resistance. And right now, holy moly, this is the August expiration. You've got that put open interest, the $16 strike is where it starts. And keep in mind what I said before, when those puts are so strong at one strike and you don't have a lot of call open interest offsetting it, it turns into a situation where it's a mechanical support level. Hedges start to kick in. The reverse is true right when you get to that $18. $18 is where you start to see the stock waver a little bit and get a little wobbly because you've got so much optimism, speculation that it's going to go higher, and those hedges that go the reverse, and they try to keep the stock down below. It sounds like a conspiracy, but it's not. It is how Wall Street makes money. Let's not even say Wall Street. This is how they make money in Chicago at the CBOE and some of those larger options exchanges. They make it by making certain that the stock is not going outside of certain bands, and this is one of them, $18. Look at where the stock is trading right now. Look at the resistance that we saw ahead of that Blade acquisition. Right at $18, right where that open interest was, and now you've slid right down below it again. Those options, that was a chart from today. $17 is where you're seeing a little bit of support, and when I go back to that chart, you're going to see that $17 level right now is where you see a lot of put open interest, and then again at 16, 15, all the way down to 14. What that means is for the next couple of weeks, we're going to have some support, even with this 8% drop today, right around that level, and that's where I start to turn into a buyer. Full disclosure, I'm long Joby 2027 calls as well. You're going to notice a theme with me, folks. It's those leap options that get me excited on these companies, and I hold them long term. Just as I would a stock, I don't care because I don't lose a dividend by holding the call as I would with any other dividend yielder. But that is where I start to draw my lines. $15 is where I see that open interest obviously being strong. And then down at $13 is where I start to back the truck up on Joby Aviation. And note that technical chart, the 50-day moving average is trending my way. The trend is my friend. Also, the 200-day moving average. I'll point out the volume's kind of dropping off a little bit here as well. So it's soft selling. You're not seeing a huge spike in that selling pressure. That tells me that I expect this region to hold as support. So when I look into September, I see more of the same, except your overhead resistance shifts from 18 up to 22. And that tells me that I've got an opportunity for this stock to run, just like ACHR Aviation, up towards that $20, $22 level. Some of the calls start to get a little heavy in September. Keep in mind that in both of these stock situations, seasonality can come into play. We're talking about the beginning of August. August, one of the worst months for stocks. September follows it up with volatility. Volume dries up because everybody's at the beach or they're not interested in doing anything with their portfolios. The real traders are out there, but volume at a large scale dries up, and that allows prices to fluctuate even more. So expect some volatility from both of these names as well as the rest of the market over the August to September, and I see that as a buying opportunity as we head into strongest period of the month for seasonality, which is October, the comeback kid, all the way through December. I don't think tariffs bother these stocks a bit because they are speculative, and obviously we're not talking about companies that are importing things from China or anywhere else. We're talking about companies that are building ideas right now. So with that said, what do I do with Joby Aviation and my outlook? Watch the corporate news that Joby is raising capital. Remember I said that, expect it, and when it comes, you can tell all of your friends, yeah, this is normal. They should be doing it because the stock price is so high. Support at $13 and $15. That's where I back up the truck at $13. $50 is where, or I'm sorry, the 50-day moving average is at $13. And then we open up to a $22 price target between now and sometime into September, even though we got a lot of volatility in the market. And my long-term case sees Joby Aviation doubling from where it is now at $35. I think that could happen in the next 6 to 12 months as we see more development in terms of their actual production of these cool Jetson-style vehicles, right? All right. So that's going to do it for me. Make sure you sign up for that spectacular 7 or the speculative 7, whatever you'd like to call it. It's down below in the links there, and you'll see a QR code that'll pop up here. Check out moneymorning.com. We've got content like this all the time, helping you navigate the markets. And make sure you like, subscribe, and content. Do all of the things. And let me know in the comments what you'd like to see me cover next. I'm Chris Johnson with Money Morning, wishing you the best trading success. Have a great day.